Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
The last one, last Monday, was about the British pound. As you can see, you have at the top of the page the title, which pair in which pair you have to look for. Then the comment, why we think this is an interesting pattern. As you can see here, the RSI is still cut by a declining trend line, which is a very interesting pattern towards a bearish configuration. And we think as the pair is approaching a huge support, that maybe with these technical indicators, the pair could break below this support, but we are not at the precise point. So you have to keep in mind this configuration may occur, but we are not sure for the moment because we're not still on the support. So to play this configuration when the prices will be more on the downside, we recommend to consider puts or different kind of puts with different strikes and different maturities. Here it is March and April. You can find also the ticker, which is very important towards your broker. Maybe you can find it more precisely. As we can see further, and in other IEC webinars, strikes and expirations are very important regarding the leverage of your product. So if you think you are a risky taker guy, you can take options detail 1 with a strike at 157 and March 10 expiration. If you're less risky, you can take an expiration in the longer term, for example in April. So this is for the trade opinion every Monday. During the month, at least 4 times a month, we provide trade alerts, which are registered in our performance portfolio. The last one, as I told you before, is about the Mexican peso. It was released last January, the 19th of January. As you can see, the pattern was very interesting. As the pair was approaching a huge support level, it was trading within a trading range, a kind of descending channel. But in the short term, the pair were next to a very nice resistance support. Very nice support, and the technical indicators such as the RSI was also supporting by midterm rising trend lines. That's why I thought it was very important configuration, and the timing was good. So I recommended to consider call and to buy call at this price with an objective, as you can see, at 230 for an average price at an average buying price at 115. So it means if you reach the target at 132, you will have a 100% gain with this recommendation. If the trade goes bad, your loss will be only 20%. That's why I consider that the risk reward in trading is very important. So that's why I take profit at 100% and stop loss at 20%. My average risk reward, as I told you before, in the performance is set at 4. So it's very good for this kind of products, especially options. Here you got all the details of the option. This is the same kind of pattern as the trend opinion with the ticker. That's right. So now, how to choose the correct option? How do I do to choose the correct options toward the recommendation I provide to you? Steve, you can add anything you want at every time you want if you need it. As some of you may know, options are calculated through three parameters, which are strikes, time until expiration, and volatility. Private investors only have the choice between the strike and the expiration, as I showed you before. So there were three kinds of options: in the money, at the money, and out of the money. Which are the difference? In each, what is a strike? I will begin with what is a strike, as I showed you before. Strike is the price at which you will get your underlying when the options arrives at its maturity. So in this case, you have the strike is set at 70, and the underlying price, it could be a stock or a forex instrument, a pair, etc., is set at 60. So if you make the difference between 60, which is the underlying price, the strike, which is 70, 60 less 70 is negative, so your call options is worth 0 or in this kind of intrinsic value. But a call, an option and a call especially have not only an intrinsic value but also an extrinsic value, which is linked to the time remaining to the until the expiry of the option, and because there is still time available for the option to be in the money, there is a value which is affordable to this time, and that's why sometimes even if the option is out of the money, even if the intrinsic value is negative or equal to 0, the option has a value itself. And you can see on this chart that when the price of the underlying is rising, an out of the money option value will rise very strongly.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.